rather be an idiot who makes money than a genius who misses out on great opportunities. What a great place to begin. Tesla.
Poor Jim Cramer has literally become the canary in the coal mine. It is so unfortunate that that guy's luck has become a living meme within the Reddit community, that the day he starts boasting about tech stocks is the day you need to sell them. Because, man, he was going off about Tesla, Apple, Nvidia, and oh my God, literally a day later, those companies, the S&P 500, all trading down now for the year, which is kind of funny. But we're going to be talking about what is causing this crash in the US, because it has no correlation to Canada whatsoever. So if you're holding those Canadian banks, a lot of those Canadian stocks that I like, you probably had a little bit more stability in your portfolio today. But let's just first and foremost take a look at the stocks themselves. What is going on here, guys? Let me zoom my face in a little bit and just take a look at this, because crypto is getting just slaughtered in the mess of this as well. Bitcoin's down to 43,000, so a lot of those crypto bears out there probably pretty happy to see it. But look at the S&P 500 down almost 2% in a given day. What can cause that? I'm going to explain what in a sec. But look at this. This isn't really bearish enough for me to be like that excited to buy. I know a lot of people in our chat groups were like, damn, I wish I had more cash to buy. I've burnt out of cash. I got a big tax bill coming up, so I'm being a little more cautious over the next month or two. But these aren't price points that would get me giddy. Rember Tesla was hitting the 800s like 3 or 4 weeks ago. So at the almost the $1,100 mark, not enough. Google's kind of getting appealing here. Any 5-10% pullback in Google is typically a buy. Facebook is a buy anywhere from 300 to 330 in my opinion. But as we scroll down, as mentioned, a lot of those kind of consumer discretion, those kind of flood to safety kind of companies, the gold even, should check out the gold price actually, because I'm pretty sure it was trading up coming into the new year here. I'm curious if it's getting hit within this market, but take a look. A lot of the Canadian banks doing pretty good. Some of the Canadian REITs and stuff getting hit primarily due to a lot of the news, the lockdown stuff going on here. Pretty mixed day all in all though. Very, very mixed day. So first and foremost, guys, let's just talk about what's going on here. I opened up a bunch of articles that are going to give us insights, because hawkish Fed sparks tech rout, Treasury sell-off, markets wrapped. It doesn't make a whole lot of sense. I'm going to try and simplify this with a couple other articles that I came by here. Central bankers expect inflation will fall to 2.6% by the end of 2022 and 2.3% by the end of 2023. This is what central bankers want, but unfortunately, it's highly unlikely that that's what's going to happen, because right now inflation is completely out of control, and because the economy is a little bit stronger and this next wave of this pandemic isn't nearly as complicated as the first wave, Fed minute flags chance of earlier, faster interest rate hikes. They're going to start tapering, guys. They're going to stop doing purchases, helicopter money, and they need to start bringing it back out of the economy to start putting a tamper onto this insane inflation. Things are just out of control. Federal Reserve officials said that the strengthened economy and higher inflation could lead to earlier and faster interest rate increases than previously expected, with some policymakers also favoring starting to shrink the balance sheet soon after. Participants generally noted that given their individual outlooks for the economy, the labor market, and inflation, it may become warranted to increase the federal funds rate sooner or at a faster pace than participants had earlier anticipated, according to minutes published Wednesday of December 14th to December 15th meeting of the U.S. Central Bank's policy setting. So there's a lot of stuff coming up right now, guys. I could read through this, but it's kind of draining. It's boring. You guys don't really care about that. All you really need to know is it's likely interest rates are going to start going up sooner than expected. It's likely that helicopter money is going to start burning out. The government's going to stop purchasing bonds, doing all that negligent stuff that has led to the moment that we're sitting in today, right? And just taking a look, guys, this variant stuff I think is going to be causing another whirlwind within the market, as well, as much as people are kind of saying, it's not that big of a deal. Unfortunately, it is big of a deal enough that they're pulling back, because they can't keep hindering the economy with 2-week incubation periods where they need you to stay still. Now they're 5 days after you've kind of started having symptoms, and they're finally passing, because they got to keep the economy running. Luckily, the hospitalizations are coming down. These are the Canadian numbers, by the way. This is nuts. And by the way, what also is absolutely horrifying is they don't really publicize the fact that you can't get tested in Canada anymore unless you're a frontline worker. They got so overwhelmed with people taking tests, you can't really get one. And if you can get one, it's going to take a long time before those results come in, up to 2 weeks. It's kind of insane, right? So people look at this and they're like, well, it could be a lot worse. Well, it is a lot worse. I'm presuming for every one of these numbers, another another 10 people probably have it. But the good news is though hospitalizations are rising, we are nowhere near where we were with the current case count. So it's likely this is the very last hurrah, as we've talked about in this pandemic. By the summer, I expect this to largely be done and over with, but this still puts a whirlwind into the market with all this other stuff going on, guys, and it's going to lead to some crazy volatility. I mean, the volatility this year, the volatility index probably going to be going off the rails. We're still seeing a lot of selling off from last year in those smaller caps, your Kathy Wood stocks, your Hylions. I mean, at least BABA was coming back a little bit still off that news that Charlie Munger was purchasing. Where's BABA in here? Right here, we're at 121, pulling back a little bit, but it's nice to see some green out of those 4X stocks, making a lot of diversified portfolios probably feel a little bit less volatile today here, folks. But what am I doing? Like I said, sitting on my hands, folks. I made my stock purchases, very happy, collecting those dividends, going to reinvest, keeping an eye on BABA. I'm still filling out my corporate margin account, which I was joking about yesterday, because the paperwork to open up a margin account in a corporation is nowhere near as simple as something like a Robinhood. I mean, these are back-to-back pages, and there's probably 15 or 20 pages here. Got to get motivated, got to get this done. Not that I'm going to use it. I noticed some people unsubscribed the other day when I started talking about using interest and margin. I've done it before. It's not like the first time I do it. There's just rare circumstances where I may want to, and it's nice to have the option even though I might not use it. But at this point, folks, I'm going to pass that question off to you. What do you guys think about the insanity of the volatility in 2022, man? The green yesterday, followed by the tanking of today, and my goodness, it's probably a good day to be a dividend investor. But hey, if we get a bigger crash, that might be an opportunity to finally start picking up these tech stocks at better valuations, because Jim Cramer said Tesla was a buy, Apple is a buy, and obviously when they tank is when they're a buy, not when Jim Cramer says to buy them. So stay cool, stay awesome, and I look forward to catching you in the next one.